Marla wanted us to look at Aspen, and there was a lot of negative news around the Aspen share price this week. But very important, despite all the negative news, this share has stopped making lows, and that is seen as very positive. This is a beautiful bullish engulfing candle in the making, but look how important this support level there is higher than this one there. And when the share retraced a little bit, the support it's found here is higher than this one. And that is seen as positive. That tells me that despite all the negative news, despite the retracements, this share have found enough buyers to lift it to higher levels. Remember, the only thing that lifts a share to higher levels is more buyers. No matter what the financials say or the news, if there is not enough buyers for the share, it can't go to higher levels. So technically, my next higher low will be confirmed when Aspen starts to consolidate above 109 Rand and 5 cents. Above these levels, the next strong resistance that needs to be overcome is this 40-week moving average. And again, look how important this bell rang and how loud it rang, because for 3 weeks, the share tried to remain above the 40-week moving average, and the 40-week moving average is that red line, and it basically just plots exactly what it says, the last 40 weeks closing prices on a line. But when the share starts to consolidate below it, I mean, there was just no way that the share could try to keep its head above the water. And again, here, this was also another massive warning that when the share started to consolidate below the 40-week moving average, it just could not sustain higher levels. And again, it just could not even touch the 40-week moving average here. It tried to bounce, but could not even come close to it. Again, tested it here, tested it here, tested it here. Yes, for a time being, it did try to consolidate above it, just lost momentum, and ever since then, since around 300 Rand, the share is trading at around 105 Rand. So Marla, I think Aspen is looking very good for a buy opportunity here. If you don't want to wait for that 109 Rand to change into support, maybe start to nibble around current levels. A stop loss you can use is around 93 Rand 75, but I think there's a lot of scope for this share price to reach for higher levels. The 40-week moving average is waiting there around 124 Rand 37. And then the next strong resistance the share needs to overcome after that is waiting there at 127.64. I think it's very optimistic that despite all the negative news this week, Aspen is starting to consolidate and to start to build on a bullish engulfing candle. And remember, this candle is in the making. So we have to look at this candle by Friday's close, when everybody's maybe having drinks and, yeah, I can't say lie next to the pool because it's too cold at the moment, but maybe just, relaxing. You should maybe look at a graph and see what this candle looked like, what it looks like. My stochastic indicator is in no man's land. It's sitting here around a 51, so it's neither here nor there. It's not really something I can go with. It's just flagging horizontally at the moment. So it's not really in ideal oversold territory. So ignoring that at the moment. And remember, your biggest indicator is always your price action. And that is captured in your candle. So look at your candle to see what the investors think of this share. But at the moment, Mala, it looks like it is optimistic. I want us to look at Amazon again, and the reason being is that previous resistance has now changed into a support. And it's so important to highlight again that technical analysis is not an exact science. But when the share started to change this level there around $1,962 into a support, it just rallied even further. So it's at a critical level at the moment, and I want us to draw in a horizontal line in here because the share is not far from testing that $2,035 level again. If it can start to consolidate above it and remain above it, we can assume that Amazon can reach for a brand new record high. But if the share starts to lose momentum and start to consolidate above it again, then we can say, all right, there's a loss of momentum. Maybe we should start thinking of banking profit. It's not the ideal time to enter into a position on Amazon. Why? Because it is extremely overbought at the moment. Yes, my indicators, both of them, both these moving averages are still pointing upwards, which highlights that there is still some room for more upside. But keep an eye on this shorter blue line. If it starts to lose momentum and it looks like it's just going sideways, then be careful and look at your candles to see what am I seeing? Is it a bullish candle? You will be able to see in your candles what investors think of this share. It's going to be very interesting to see if there's enough investors to change $2,035 into a support. And again, above that 40-week moving average, the long-term investors can remain positive about Amazon. Yes, it did go sideways for a very long while, since about November 2018, and we could see that the share price, yes, although it rallied, it came back to the 40-week moving average, but it found strong support here and bounced again. So Amazon, it will be interesting to see how it plays out and what happens. I want us to look at the Dow Jones, because Kevin asked us to see, if the inverse head and shoulder can take the Dow Jones to a new record high. And yes, let's just first look at our indicator. Yes, it is in overbought territory, but look how that blue line has started to lose momentum and looks like it basically has stopped reaching for higher levels. So when that blue line breaks through the red line, Kevin, that would be an indication, yes, there's a divergence and maybe we can see a retracement. But look here, I've drawn in this horizontal line. In January 2018, it tested the level, retraced. Again here in October 2018, tested these levels there around 26,600, retraced massively. Again here in April 2018, tested it and retraced. Again, we are at critical levels, but the Dow Jones have started to consolidate above this 26,600 level, and that is seen as positive. That means this possible inverse head and shoulder, and yes, it's a massive left shoulder, this head, and this right shoulder tells me that we can see a lot higher levels on the Dow Jones index. So if the index continues to consolidate above this 26,600 level, we can see a brand new record high. We can see level around 28,000 and even higher than that if we project it upwards, maybe even 30,000. So at the moment, as long as we're above that neckline, Kevin, we can see higher levels. Unfortunately, my indicator is overbought, and with all the uncertainty and lower interest rates and Fed policies and monetary policies, we might even see a lot of uncertainty, obviously, and then a little bit of a retracement. But let's look at the candles instead of the formation to give us a little bit of more direction of what might happen. So this week we've got a doji candle. Why? The real body is very tiny, and both shadows on either side of the real body is almost the same in length, and that tells me uncertainty. The investors are looking each other in the eye and they're not sure whether they want to take this index to higher or lower levels. The candle before that might have been a possible hammer candle. Long lower shadow, relatively small body. But then I could have only said that when my next candle was a bearish candle, because a hammer candle can either hit out new highs or hit out new lows, prepare for new lows. So at the moment we are in limbo. The index is not sure what they want to do with it. So at the moment, Kevin, use 26,600. As long as it's above it, we can see higher levels. But when the index starts to retrace below it, lower levels. So technically you can use that top there at around 26,994 as a stop loss, and at the bottom side, if you want to trade it higher, that 26,600. I want us to, and we've said previously and we keep on repeating it, but it is so important, the 40-week moving average above it, the sentiment towards the index will remain positive, and the index is trading above it. So at the moment, the sentiment towards it is positive, despite all the trade wars and the negativity. I want us to retrace back, and I wanted us to have a look at a formation that also developed here around July 2015. Because sometimes technical analysts are seen as psychologists for graphs, because you have to identify patterns to see how that instrument reacts. Is it an instrument? Is it a type of instrument that normally confirms the formation and just rallies, or is there sometimes a little bit of a false break and then retraces? So I want us to look at the Dow Jones and what it did in July 2015 to about January 2016. And there was a possible double bottom formation in the making. So we can see that our indicator was stoppish and retraced massively, but it didn't take it long to be oversold and then rallied again. Having said that, this possible double bottom was confirmed, retraced, tested, retraced. It tested the 40-week moving average again. It could keep it as support. It rallied a lot, came back, tested almost the same level of the neckline, bounced a little bit, retraced a little bit, again on the neckline of this double bottom, again very close to my 40-week moving average. Tested it almost or very close to it. The 40-week moving average was waiting at 17,879 and the low was 17,994, very close to it. Then massive bullish engulfing candle, and it completely took it to higher levels. So we can see that this index is testing sometimes a lot of strong support and resistance levels before it just confirms it and rallies from it. So Kevin, clearly you have to have a lot of patience and maybe stick to strict stop loss levels and make sure your position size is not too big or too small that you can lose out. I also want us to go back to around November 27, 2007. Where, the financial crisis period, where things started to look pear-shaped. And again, there was a possible double top on the Dow Jones. I mean, the index retraced a little bit, tested a strong support, beautiful dragonfly candle with that long lower shadow. It reached to higher levels, retraced again. And I mean, for about 7-8 weeks, the index just consolidated around that 40-week moving average. And the traders, I'm sure, were very unsure of what they need to go do, because it could not decide whether it wants to keep the 40-week moving average resistance or it wants to change it into a support. But we can see in that week of the 31st of December 2007, it tested that 40-week, retraced. Yes, it bounced a little bit. Again, if I extend this line very close to that next line, it tested it again and retraced. But again, when that 40-week moving average changed into a resistance, I mean, it was just the whole carts came down. And so again, Kevin, you can see that a formation on the Dow index so often gets tested, retrace a little bit or bounce, tested. But I think use that 40-week moving average, as we've seen in both these patterns that I've highlighted, to determine is the sentiment positive or negative. Hope you enjoyed it. If you have any questions or you have anything that you want us to analyze next week, please feel free to send us an email. Cheers.